Hey everyone, my name is Nick. I'm the CEO of Doc, and welcome to Identity3, a podcast all about digital identity and Web3. And I'm delighted to be joined today by David Palmer, working both for Pearpoint and Vodafone. David, thank you very much for joining us.
Thank you, Nick. Very nice, Francisco. Nice to be on the podcast. It's been a long time in the making, but really excited to be here.
Great. And David, you and I met for the first time at a Future Identity Festival in London just a few weeks back. And so I know you're eternally doing conferences and things like that. So I really appreciate taking the time out of your busy schedule to join us today. Without further ado, can you please introduce yourself and what is your role at Vodafone?
So my name is, as you said, David Palmer. I'd like to consider myself a sort of innovator in the field of Web3 and IoT. My role at Vodafone is for that. So I've helped Vodafone in the exploration of Web3 and blockchain technologies. More recently, the Metaverse, and I'm also the co-founder and chief product officer of a new venture by Vodafone called Pearpoint. And a platform there called the Digital Asset Broker. So that used to be within Vodafone, and it's now a sort of independent venture owned by Vodafone and Sumitomo Corporation.
It was interesting. I was saying to Francisco before we started, David, that when we speak to some of the people from particularly large enterprises, and you've explained the difference between Pearpoint and Vodafone, the language and the terminology that comes through both in your communications and that of Vodafone is much more Web3 centric than certainly other large corporates. And I wonder if that's down to your own background to maybe being a bit more Web3 centric than large enterprises. Is that correct?
Yes and no. I mean, I think a lot of the enterprises, certainly the telecoms, the large telcos are like Vodafone and others are on this journey to become technology companies, right? So I think you're seeing a lot of companies now on the journey to become platform organizations, to become telecoms, or to become technical organizations, and of course, Web3 is a key technology in that journey.
What got you first interested in digital identity, and what aspect, if there is an aspect specifically about digital identity that keeps you motivated to continue to work in the space today?
I mean, digital identity and the phone and KYC are all linked, right? So I was aware of digital identity and its importance, from just mainstream telecoms and the KYC and the phone numbers and a lot of work around that. But what got me really interested was this concept of decentralized digital identity and self-sovereign digital identity, and some of the projects there which were really looking to create decentralized identifiers, and they have a model where you have issuers and you can basically verify those issued credentials automatically. And for me, that became very interesting because at the time I was looking at Internet of Things and really looking at, okay, how can you make a autonomous car pay for parking or charging or a toll, and the idea of having an identity which was decentralized to an extent, which sort of makes the market. You can get some interoperability there, but the idea of having an identity that was decentralized and had credentials that could be automatically verified was very appealing. So we took that on. And really came at it from a device angle. So if you look at identity standards like EIDAS 2.0, which is a directive, I don't believe it's a mandate yet, but it's looking at a European identity wallet. And the European identity wallet is basically saying that every organization or person can have a digital wallet, right, which holds their identity credentials. And of course, we've been very interested in taking that forward to IoT devices, right? And very interested in the SIM as an identity credential, especially where you start looking at things like the Metaverse and other online activities. We're increasingly going online. We're increasingly doing more online, and I think that trend will continue. And the idea is then, how do you trace the online activity back to a person? So you're in the Metaverse, you're a member of different platforms there. You can have different personas there, but ultimately you need to trace it back to an organization or a person who has a legal jurisdiction, and where you can have recourse to legal systems. So then we started looking at not only device identity but the phone number as part of that key part of the identity credential, which could be used in these digital environments.
Yeah, and you spoke a lot there about Internet of Things. Of course, that's been a buzzword that's existed for a decade or more. I think I saw in one of your posts, although it's possibly a little bit older, I think there was 3 billion connected devices at that time. I think it's probably quite a lot more now. What can you tell me how all that links into what you're doing at Peerpoint, and what would you say is the economy of things? That was something that you wrote about a little while ago. Could you tell us a little bit more about that, please?
I think the prediction now is anywhere north of 30 billion IoT devices or connected devices in operation by 2030. But these devices, if you dig a bit deeper, a significant amount of the data from these devices is not used, and not only is it not used, it's costing a lot of money for the device owners to handle that data. Very interested in, part of where Peerpoint came from was saying, okay, could we actually turn these 30 billion devices in 2030, or however many billion devices now, could we turn them into an economy? Meaning, could we create capabilities for each of these devices to interact securely with each other? Could we provide the capabilities for these devices to authenticate with each other across company lines, across ecosystems? And more importantly, once you've done that, could we create the capabilities and enablers for these devices to transact with each other? And that's where you get the economy of things, where essentially you have devices that have interoperable identity passports, that have cryptographic authentication mechanisms, and the wallets and links to payment systems so that they can transact. And I think these things come together to essentially turn these devices into discoverable economic agents, and with the ability to automate transactions. And that is the economy of things, as we put it. But there's another dimension to this now, because as well as devices transacting, I think one of the new entrants this year to the landscape is AI in a big way, generative AI and AI robots and AI data. So not only are we looking at an economy of things, but there's also an economy of AI, which is also linked to the data that IoT devices produce, and being able to have an identity for AI entities and AI bots, being able to have some security and authentication of that will become very important as you go forwards. And I also think that there's another link between IoT devices, 30 billion devices in 2030 producing huge amounts of data, going into AI, large language models. I think will be a source of transactions between devices and AI ecosystems in the future.
Yeah, and just to be clear as well, David, what we're talking about here when we talk about IoT devices, we're talking about these devices working with each other autonomously. So really there being, almost no human involvement between them, and these devices working for our benefit.
Correct. Certainly in the future, when you look at automotive, so there's a lot of excitement about in-car payments at the moment, and cars becoming intelligent and cars becoming self-driving and autonomous in the future. But at the moment, you still have a owner, driver, user in the car. But the same technology can be used essentially where you're seeing a lot of the car manufacturers talking about the car paying, not the person, right? So you can still have a car paying for parking, paying for tolls, paying for road use, paying for charging. But what we can also do is link that device and its identity and its payment credentials to a person. So one example of that is a fleet company who has multiple drivers. Instead of trying to manage payment across the drivers, why not enable the fleet vehicle to pay and authenticate many drivers to be able to use that payment credential in the vehicle? So there's some practical examples where you can have autonomous transactions from the device, but also where you can link that device or pair it to a person and authenticate them.
One other, this is a little bit left field, David, and actually one kind of novel concept I'd seen. I don't know, I suspect you might have come across it. Have you come across the notion of cars that own themselves?
Yeah. So that has been talked about for a while. So this is the car with its own P&L. That
Yes.
would, it's part of the shared mobility model. I mean, it links to another side. I mean, I think you can only have an economy of things, right? So there's a study by STL Partners which is predicting that by 2030, there's a lot happening by 2030. I want to be around in 2030.
Yeah, that's right.
But by 2030, there will be 3 billion devices transacting in the economy of things. 3 billion. And when you sort of look at it, you're saying, okay, how are those devices going to get financed, right? And why a lot of financial organizations are interested in this is because this is the chance for embedded finance on IoT devices. So to plain and simple, you can embed payments, you can also embed financing into that. So going back to that example, why can't a car be tokenized, or an EV charging station or a set of EV charging stations be tokenized? And why can the investors or owners of those tokens not get a proportion of each transaction? Meaning, when the car is rented, they get a proportion which would be distributed by smart contract. Or in the case of EV chargers, where you're looking at 2.5 million EV chargers needing to be rolled out across Europe by 2030. Could be 2025 or 2030, I'm not sure. But significant millions of chargers. This could be an excellent way to finance them, right? Communities could come together to ensure chargers in their areas, and essentially gives the finance companies the option to go into business with the other stakeholders and essentially get repaid based on usage. And that is the same sort of principle as the sort of car with its own P&L. It could work for any devices. And PairPoint stroke DAB acts as two things. One is a wallet. So it allows the device to pay for things on the owner user's behalf, and the other one is as a point of sale, which allows the device or the owner of the device to sell to the user on behalf of the owner. And for cars, that's especially interesting as they go towards sort of these in-car payments and trying to sell Spotify and trying to sell subscriptions, etc. That it works both ways.
Yeah, fascinating, isn't it? I think as well, it could be a way for, like, if we're all worried about where's our income going to come from in a few years' time when AI, whether, takes or removes a lot of the jobs, where it's going to come from something like universal basic income. It could even come from partial car ownership, that we all have a stake in a car that's kind of autonomous and self-driving. So it's definitely going to be a fascinating journey up to 2030, like you said. David, you unpacked quite a few things there. It might be worth just kind of restating the kind of key enablers that you see for the economy of things. We talked a little bit about wallets, identities as well. What are some of the other things that you think are going to be key as we move towards this economy of things?
So I think the economy of things, identity, as we've been through, is a key enabler. Wallets is obviously the interface there. The other thing is root of trust at the edge. So there is an edge component to this. So you have connectivity of these devices, which is important. But the other side is root of trust at the edge, or cryptography. And part of what we do at PairPoint is we work with the SIM card initially, although we will move to other forms of connectivity as well. But we work with the SIM card, and there is a bridge between the SIM card, a cryptographic bridge between the SIM card and the platform, which has a blockchain layer to it, layer one. And there is also cryptographic signing. So there's two types of technologies, if we want to get technical, that are underpinning that. One is IoT safe, essentially where you can use a secure element in the SIM card and an applet in the SIM card that can produce multiple private public key pairs. Bottom line is that you can use that to sign online. So you can use that to sign on chain. The device can sign on chain using that. And the other proprietary technology to PairPoint and Vodafone is something called SIM Trust, which is a generic bootstrap architecture, which allows you, certainly for older devices, to bootstrap cryptography. What that means in simple language is that you can trust what's happening on the edge. So where you talk about pay-per use, so EV chargers that are tokenized and the token holders are getting paid back for each transaction, you need to verify each transaction. You need to know the device hasn't changed, that the SIM hasn't swapped, that it hasn't moved. And that root of trust at the edge provides that. It signs the payload. It provides certainty there. And I think that's important when you get into these in-car payment use cases, these supply chain use cases, and other use cases, that you have that root of trust at the edge, to trust the data, to trust the service, to trust the device.
Yeah, and cryptography brings a lot of that to the table as well. And so that's the technology layer that Peerpoint provides. What other things do you provide in terms of working with companies in the space? I mean, obviously you're kind of generating kind of markets there and working with customers. Can you talk a little bit about what other things you do besides technology, or helping with architecture and things like that as you work with businesses trying to embrace this?
Yeah, I mean, the technologies are enablers. I mean, some of the use cases we're looking at is we have a live EV charging solution. So this is helping fleets and automotive manufacturers to access an ecosystem of charging, to be able to have smart contracts that allow them to bundle charging into their monthly subscriptions, to also interact with smart grids, so that you can have clean energy certificates, or certificates showing where the energy is coming from, ESG reportings, expense management. So that's one of the use cases. The other one, as I've sort of hinted at before, is in-car payments. So using this to help automotive manufacturers to have a more streamlined experience with users, where they can essentially enable users to use the card to pay for goods and services, but also, more importantly, they can have a relationship with that customer, and also sell them goods and services through the car. So that's one. The other things are supply chain. So this is supply chain and logistics, so helping to streamline and automate the documentation based on IoT data, smart contracts and location, and also to then look at trade finance and how the data can reduce risk and automate payments and change the way payments are made. So those are some of the ones that we're starting with. I think some of the use cases that will use the economy of things enablers and that we have are probably not even thought of yet. We're expecting a lot of ideation from partners and other users of the platform going forwards. But those are opportunistic use cases and business problems that we're helping to solve. Because Vodafone, I think, have 40 million SIMs in cars at the moment, so there's a big footprint there. And I think 70% of the data transmitted in European cars are over the Vodafone network. And wow. In supply chain logistics, also another big footprint. So these are areas which are opportunistic in terms of solving business problems, but also growth ones. I mean, obviously, as I said, the in-car payments market is forecast to be up to 500 billion by 2030, and the supply chain logistics market is huge as well. And we know what the EV charging is, a big transformational thing for the automotive industry. So I think that's why we're there. But we're expecting to move into other areas, healthcare and other areas going forward.
Thanks for that. And then one of the other areas that you talk about is also the metaverse, which almost feels like a swear word these days. It's like everyone was talking about it a few years ago or even a year ago, and now it's kind of a little bit quieter. And I want to get into the metaverse stuff a little bit, David. But before I do, people talk about the kind of death of the metaverse. Do you think that's over-exaggerated? And if so, why?
Absolutely. I think we've got to remember where we were. And what was happening at the time when the metaverse hit the hype cycle. It comes on the back of billions of people being locked down because we had a pandemic, not able to do things that we would normally do: travel, go to concerts, socialize, shop in the way we did. So there was a lot of emphasis at the time in how can you do things that that you can't do physically, right? So can you go to a concert in the metaverse? Can you socialize? Can you go to work? So that's why I think that had something to do with the buzz. Obviously, there was a conception and maybe a demand at the time that we'd have a big bang metaverse where we'd have this all-encompassing, joined-up metaverse where you'd have persistence across everyone. And I think that was just a hangover from the pandemic and where we were. I think the more realistic picture and I think to ask ourselves is, okay, does immersiveness and 3D and AR, VR add value in some cases? I think the answer is yes. In the industrial metaverse, we've seen digital twins, digital factories, etc., where real value is being added, and that's growing. I think if you think about social media, virtual workplaces and collaborations, education, these sort of areas, there's a lot of areas where the metaverse embedded to other platforms adds value. So I think the first phase of the metaverse is the embedded metaverse. And this is where you have AR, VR, immersive technology embedded in other platforms. And then I believe there'll be some interoperability. And then I think in the long term, you may see some convergence. But the metaverse isn't dead. It's just evolving differently from what we expected.
And these things always do. I wonder if anyone ever, because AI kind of went on potentially is going to go on a similar journey where everyone's talking about it, and you had people looking at films like The Lawnmower Man, if you're old enough to remember that film, and then everyone's disappointed that AI didn't arrive the next day. And of course, over the course of the last year, it's all anyone can talk about. So maybe we'll see the same journey for the metaverse as well.
No, absolutely. Absolutely. I think it will come back. I think it is coming back, but it's going to be on a value-added basis, right? And as I said, it will be the embedded metaverse, then the interoperable metaverse, and then you'll have the converged metaverse going forwards. But my thinking on the metaverse is slightly different because you talk about the metaverse and you see someone with a VR headset, and actually that is only one feature of the metaverse. The metaverse, and we tend to think about it from our own personal point of view where we have choice. So I can actually fly to the Alps and I can go skiing. I can go for a run. Not that I'd be that fast, but I can go for a run. There's things I could do. But there's actually people who can't do that, right? So there's people who can't travel because of visa restrictions or disabilities, who couldn't attend Harvard University, right, or Oxford University. The metaverse can remove geography. It can remove geography, and it could make it possible for someone in a developing country who can't afford, or don't have the visa, or just can't, or are disabled, who can't travel, to actually have that education, right? So that's where you see a value added, and it could make someone who's disabled run again. It could make someone who's old do something that they could only do if they were young. So there are features of the metaverse which will add value, and I don't think it's going anywhere when you consider those things. But also, the metaverse, when you think about it, is more than VR. In my view, it's a new digital operating system for a new digital world. And I believe when you look at the Apple Pro demonstration, it was very powerful in that it showed that the metaverse and that interactive space it creates will be the new web browser. It's going to be the new interaction point between people and content. And that is going to be very powerful. We don't know how it will develop. But if it's the new web browser and the new interaction point, it's going to be pretty important and grow pretty fast.
It's interesting. One of the challenges, Doc, is a decentralized company in that we all basically work from separate locations. And one of the challenges that both Doc and any company operating in that decentralized way is collaborating and having immersive discussions in meetings, and potentially, obviously, metaverse could be in something as boring as video conferencing. It could really make a big difference there as well. So maybe that's something that we'll see come through. You spoke a little bit on LinkedIn, so kind of building into the metaverse topic a little bit more, David, and you did write this a little while ago, but you talked about the mobile phone and digital telecommunications being the middleware of the metaverse. Do you still believe that to be the case? And maybe you could unpack that phrase a little bit for us.
Actually, yeah, I remember writing that, and I remember being very excited about it. I do. So I was talking about digital identity just yesterday, actually, and one of the things you discussed with it is adoption. Could digital identity or Web3 decentralized digital identity, verifiable credentials and issued credentials, be a killer application? Of course, it could. It could change the way I apply for a mortgage, the way I travel, the way I rent a car, the way I get into the building. Removing paper credentials and replacing them with digital ones that could be verified. I mean, that could be really transformative for people and our everyday lives. But the reality is that we've got very little adoption. I was listening this morning that Peru have a digital credential for travel with the passport, and you can go there having a digital passport or credential, and you don't have to show your physical documentation. But that is only a small thing. And when you look at it, there are much bigger adoptions needed for this to take off. So then you look at, okay, with AI moving at pace, with Web3 moving at pace, with cloud moving at pace, with the metaverse moving as well, and you're saying, okay, with all of these things moving, the digital world exploding, what is the one thing that could actually be an identifier that you could use now, that the majority of the population have, that could essentially is good to go, could be used and could trace back to a jurisdiction, a person, an organization, and give you recourse to legal systems, etc. And that is the phone number. And I believe that the phone number, there's 8 billion people who will have a mobile phone by 2030, and there could be even more phones and numbers in operation. So I think it's a proven technology, and it scales, and there's systems behind it for roaming and KYC and security, and it just seems that it could be the middleware that not only allows you to roam across different metaverse environments with, in a regulatory way that's policed and governed and traces back, but also this link between the physical and the virtual world. My definition of the metaverse is that it's a virtual world that sits alongside the real world, right? And I think that's what we realize. We're not going to leave the real world very, very, very quickly. We quite enjoy it. I quite enjoy going to conferences. I like going to concerts, and I like traveling. But I also, given time and travel constraints, would like to do more online. So I think they'll coexist. And then you have the problem is, how can I take an identity from the physical world and make it work in the physical world, where I have that hybrid? So I'm communicating with you, Nick. You're in a virtual environment. I'm in the office here. What could be the middleware and the common denominator of identity that could do that? And I think the phone number is capable of that. So I think that making a call in the metaverse could involve metaverse to metaverse communication. Phone number would work. More importantly, it could involve a physical to metaverse communication, in which case the phone number could also work. So I think it's one of the successes over the last 20, 25 years, the phone, 30 years. I think the progress is now 95% of the population in terms of penetration. And it's already working with things like digital wallets. Digital wallets, another thing where we've got scale. I think there's 5.6 billion digital wallets expected by 2030. It's 65% of the population. But the phone number is already working with that. It's already working with the internet. It's already working with fintech systems. So I think it could be an important tool in the transition and the coexistence of digital and physical.
Yeah, really interesting. And like you said, that number 2030 keeps coming up. So
2030.
It's the year to be alive for sure. And David, you kind of, and linked into this, like you kind of also wrote about having a Metaverse Decentralized Digital ID linked to a phone number, which kind of sounds very powerful as well. So that another linkage between virtual and real world. Can you talk a little bit more about that for me, please?
Yeah, I mean, it's the same. It's just saying that the digital identity is linked to the communication and linked to a person, a business, or an organization. It's the identifier because it does trace back to a person, a business, a jurisdiction. Whereas, I can create a password, and in a lot of these gaming environments or social media environments, there's no KYC. There's no real strict rigidity on me, being the age I say I am or being in the location I say I am. And that's fine, right? Maybe not everyone needs to know those details. But if something happens, right? If I'm entering a contract that's legal, then there's some cases if you're doing certain things, you need to be over 18, for example, or you need to be in a certain jurisdiction. So the phone number would provide all of those informations where the owner of the phone number is KYC'd. And then it provides the foundation for financial activity and for other activity where it can abide by the law. I think the key thing here is that if you look at Web3 and you look at the metaverse, these technologies are moving at pace. Maybe the metaverse has slowed down, but they're moving at pace. And I think the innovation is outstripping the regulation and the governance. We're seeing that with AI as well. However, the bottom line is that the legal system we have has taken centuries to develop. May not be perfect, but it's taken centuries to develop. So the reality is that if these technologies are to take off and economic activity is to increase there to any significant level, it needs to work within the legal system we have, right? So you need to have recourse to legal credentials, you need to have jurisdiction, you need to have contracting, you need to have protection of copyrights and trademarks. And if something happens, there needs to be a recourse. There needs to be something you can do. And if the phone number can link to KYC, it can link to a person, jurisdiction, and a legal system, then that seems to me to be the middleware between these new technologies, these new platforms, and having a recourse to a legal system that is not going to be replaced anytime soon.
And the great thing, of course, about mobile phones is the verification aspect's already done. So like in the example that you gave, you're not having to go and create something new again, which would require potentially IDVs, identity verification providers, to get involved and go through that process, which would undoubtedly see that process be unsuccessful for some, and maybe you'd see kind of people dropping out. But if you've already got that verification done through phones, it makes it much more streamlined as well. We've talked about a lot of different things, David. Going back to more self-sovereign or decentralized identity, I'll use those two phrases interchangeably, and verifiable credentials. Like what do you see outside of what you've already talked about that you see as the most compelling use cases to this technology? I think we talked before, and I was getting the impression some people believe it's a kind of solution looking for a problem. And in some respects, like the adoption that we've seen so far is we expect to grow significantly, but it hasn't been there in certainly a mass adoption way right now. But what are the use cases that really excite you beyond what you've already mentioned?
I think single sign-on steroids. So the ability, for myself, and it could be because I'm getting old, but I honestly struggle to keep up with the passwords on different systems and different platforms, especially where you change your phone, right? And there's some passwords that don't carry across, and then you're looking for a password that you had 2-3 years ago. It can be really difficult, but having a common identifier, a common password, a common credential that can allow you to seamlessly and securely move across different platforms, I think would be, it's very exciting and something that helps with the user experience, the customer business, consumer business experience, and could bring in massive efficiencies, bring massive adoption, and streamline things. I think the other side of it is what excites me is moving, and this is where you include Web3, right? So when you include Web3 in that, you can essentially have the potential to move from a trustless world. When we get up in the morning and we start our journey, we may go to the station. We've got to show a travel credential, right? Or if we don't have a travel credential, and we travel on the trains, we show a payment credential, which shows that we have a credential that will allow us to pay for the travel. Then we get up, so then we get on the train, we get off, we go to work, we've got to show our pass, right? Or if we buy a coffee on the way, we've got to show another payment credential to show that we can buy the coffee. We have to show a credential to get into the building. Going home, we may want to stop off for a drink. We may need to show an age credential there to show that we can have something over 18. It just goes on, right? So why is that? Because we don't trust each other. Right. If we all trusted each other, then you wouldn't need any of those systems. But the resources and the friction that comes from a trustless world is absolutely massive. It's bad for the planet. It's bad for resources. But blockchain and self-sovereign identity and verifiable credentials and zero-knowledge proofs as the beginning enablers essentially could allow you, if you look at that journey, to walk past the barrier, because I've already preloaded. You could see my location and the barrier's location appeared. They could automatically check that I've got a credential to pay for it. So I walk through that. I get into the building. My work credential is automatically checked as I go in there. So I walk in there. I buy a coffee. I can just pick it up and go because my location again is paired with the coffee location, and they can see that my hand or whatever has taken the coffee out of the store. And you could just see that you could move to a friction-free world where you have decentralized identity and the blockchain providing the trust for this friction, for this removal of friction. Whereas at the moment we have friction because there's no trust. So we take everything is geared towards the protection, right, and the sort of risk averse approach, which is what it needs to be now. We've also got a combination of paper, Victorian type proofs, and the digital world where I'll take a paper pass. What does that mean, right? Or I'm gonna sign something. What does that mean? Everything is digital. We know that all of the infrastructure is digital. Why have these physical steps? It means nothing, right? So can we then, does decentralized digital identity, allow us to have a digital identity infrastructure for the new digital world and the new digital citizen? I think it does, and that is exciting.
And one of the key parts of like how an example that you gave, David, where you're going to the station in the morning and you'd have, your train ticket, you'd maybe have a way to pay for a drink or a coffee, or you'd maybe have an identity to show as well to prove you're over 18. Most people believe that this will be in a wallet of some sort that will be ideally probably on your mobile device. But also there's web wallets, because there sometimes can be usability concerns that particularly companies might have around making sure that one of their users has yet another app that they need to download and use. So some larger companies prefer kind of web wallets or cloud-based wallets. Where do you sit in that debate? Do you think there's a clear answer, or do you think it's use case dependent?
Yeah, I think it's use case dependent, and linked to the risk levels. Yeah, we are moving towards a world of wallets. Why has the sort of I won't name the companies, but the company name Pay with Pay at the end, why have they taken off? Because of convenience, right? And because of convenience, but underlying that is some security in terms of hardware secure modules and other things that allow the risk level to be reduced, so that you can have that increased convenience. Now, in terms of web-based wallets, app-based wallets, hardware wallets, I think what's clear is that we're moving towards a world of wallets, and those wallets will have our identity and they'll have different credentials, and they will be our interface, I believe, between us and the world of fintech and Web3 finance. But the jury's out on what form that takes. Some of the world I was describing, is a world where you don't even need a wallet, right? You just need to show up somewhere. You just need to have the ability for your credential, your identity to be to be verified, and that could be just on the phone, and just maybe your SIM card, for example. And you just need location pairing, right? The idea of going into a store, picking something up, and going out could just be based on the fact that the store and its contents are geo-fenced, and where my location and that goods location are paired, like for example a car, and is paired beyond a certain perimeter, we can deduce that I've taken the car, in which case I'm automatically charged if they have a payment credential. So this is a new dynamic where it's not a sort of proactive user app in terms of a wallet with a hardware secure module and a key. It's actually where you become the wallet yourself.
Yeah, it's fascinating.
Yeah, interesting how it could evolve, but that you could see how that could take off.
Yeah, absolutely, and yeah, certainly the more convenient, the more likely it is to be mass adopted as well. I'm respectful of your time, David, so I'm kind of moving to the final question now. And you've probably covered some of this already, so apologies for that, but I think there might be maybe some new insights that might come out of it. You wrote the season of blockchain growth is all about convergence. Could you tell us about how blockchain is converging with the industries that you've mentioned, specifically kind of fintech, AI, IoT, etc.?
So I did write that, actually. I remember. So there's two types of convergence. So I think what we've seen in the blockchain world is a convergence at layer one and some interoperability at layer two, which is more pitching layer ones at infrastructure. I think we spoke too much about this blockchain consensus protocol, another blockchain consensus protocol. This blockchain has this number of transactions per second. Nobody cares. The bottom line. People in Web3 care, but the people using the application, they don't care. All they want to know is that it's trusted and that it will support the user experience that they want. So that convergence, I think, is useful, and we've seen a lot of developments there. So you can have public blockchains, public permission blockchains, etc., which is getting it nearer to being usable by enterprises and financial institutions. The other barrier for use was the gas fees. Gas fees, in some ways, were a barrier to entry to enterprises taking Web3 and using public blockchains because of the unpredictability of the costs, but also things like sanctions, right? Who's going to get the money? How do I ensure that I'm not paying for gas and that some undesirable bad actor is going to get the money? Now you get into what I call the convergence, where you're seeing a lot of big financial players, big banks and financial companies entering the space. They've been there for a long while, but you're now starting to see the evidence of what they're doing. And you're seeing things like Visa come up with using account abstraction smart contracts to abstract away gas fees. Massive thing, because that actually means that you can do business with Visa and you don't have the risk of the gas fees breaching sanctions or something like that. So that's absolutely massive. You're seeing tokenized deposits by companies like MasterCard, doing tokenized deposits, which are capabilities to use to tokenize your bank deposit and put that into stable coins or retail or other types of tokens. And you're seeing JP Morgan having programmable payments using the JP Morgan coin, etc. So what you're seeing in terms of convergence is, number one, convergence between Web3 and the financial fintech world, which I think is really important, because Web3 is not going to replace the financial fintech world, but it does have a lot of capabilities which can augment and enhance the financial fintech world. So I think that's an important thing, seeing that come through, and that will drive adoption. If you look at the last thing, I think there was roughly just over 330 million crypto wallets. There's 5.6 billion IoT wallets by 2025. I've just got to plug my power in. I'm losing power on
Sure, no worries.
So I'll finish. So I think that's really important, that you have the convergence of Web3, the convergence of Web3 and fintech, and we also have the convergence with the wider world, convergence of platforms, etc.
David, thanks for that answer. That's been really, really insightful. Is there anything else that you wanted to mention to our listeners before you go today? Anything that you're working on that you thought would be relevant?
No, I just saying that I am working on a book called The Business of the Metaverse. I could put the link in your podcast. So it'd be great for people to be involved, to read that. A lot of what I'm talking about has come from that soul searching exercise of writing a book. And also, really excited about what we're doing at Peerpoint, and some of the use cases you'll start to see in in-car payments, EV charging, supply chain. We look out for the headlines in 2024. We believe that we will build the biggest ecosystem of economic agents or devices, which are economic agents in the world. We want to bring telco to Web3. We want to bring telco to Metaverse. We want to bring telcos to AI. And we believe that augmenting the SIM card and using that as a bridge into these worlds is the way forwards. And we started with these use cases, and we've got big ambitions to grow. So thank you.
No, our pleasure. David Palmer, thanks for coming on Identity 3.
Thank you.